why do you think India has not reached that point yet where we've been able to build a large product-oriented company?
Warren Buffett actually spoke quite plainly about this. He is that successful because he was born in the US. Had he been born in Somalia, he would not have been Warren Buffett that we all look up to. Anything that happens, if US catches a cold, then we all sneeze basically.
If a founder wants to start up today, what are the 2, 3, 4 things that he must keep in mind?
The domestic market opportunity understanding will always be with the domestic investor. So let's really start from there. Don't chase headlines. I mean, you don't need to be on the front page of Forbes 30 under 30.
Where you meet founders, what are the red flags that you look at? Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, welcome to The Money Mindset. Today, my guest on the show is Archana Jahagirdar, who is the founder of Rukam Capital. Now, Rukam Capital is a company that is a venture capital firm that invests in consumer and consumer tech startups. They have a variety of companies that they have invested into. Some of the popular brands that you would know would be something like a Sleepy Owl, Swami, Go Desi, Burger Singh, and a lot more. So we're going to talk to her about that. Archana, thank you so much. This interview has been a long time coming, so thanks a lot.
I think we're both very busy. So two busy women. So matching calendars is always tough, but yeah, it's great to have you.
And you know, this is a hot space, right? And you have been in this space for a while. You've invested in a lot of consumer tech companies. First, I want to just understand from your vantage point, what is the startup landscape looking like right now?
So there are lots of, I think, contradictory almost sort of pieces that are happening. I think the cohort of founders today have higher intent, and that doesn't mean that there's disrespect for the earlier generation of founders, but I think the ecosystem is a lot more mature. There's a better understanding of what it means to take external capital, fiduciary responsibility, which I think was not very clear. You know, like in 2017, like I used to call up, and we do a lot of cold calling to founders, right? So we would call up a founder and say, hello, you know, we do this, we give capital and take. They would say, loan नहीं चाहिए हमको, अच्छा EMI क्या ये? And you know, so the thing was that it was such an alien concept to so many founders back in the day. So I think now we have to do a little less education and explaining what VC risk capital means, you know. I mean, sometimes I still, of course, get asked this question that what is the collateral you take? I'm like, no, that's the whole point of this, that this is risk capital. We are taking the same risk as the founders are. So there has been a lot more education therefore with founders. I think the LP base, you know, the limited partners who give us capital to invest, I think there is again education that has happened there as well. So, you know, people are not expecting returns in 3 years. Like, we are not capital market, and even capital market doesn't give you returns in 3 years, even in the best of times, right? So I think the fact that there's education is a good thing. I think also if I look at the entire spectrum of stakeholders, so even within the government, there is an understanding the differentiation between an SME and a startup. You know, again, in the early days, people would think that an SME is also a startup, and why are we making that distinction? So again, there is a better understanding, which is a hugely helpful thing, I feel. So that's one. But at the same time, there is a lot more capital constraint today, risk capital constraint, because some of the big boys have stepped out of the Indian market. So that has led to, you know, founders having to be, I think, more frugal. And, you know, there is mortality because capital can sometimes solve some issues. But of course, if you've not found your broader market fit, then nothing, not even God can save you, basically.
So when you say capital constraint, tell me more about that. You're saying some big players have left.
So SoftBank, Tiger, Sequoia, the fact that they are not active in the Indian market the way they used to be active, you know, that does have an implication, right? Because they came with billions of dollars. We are not even talking about millions. And you do, and as it is, India is an undercapitalized country, especially when it comes to risk capital. But even if you look on the fixed income side, and when you look at this very early stage, this cohort of very early stage sort of companies, there isn't enough capital available in India, both domestic and foreign. So because of that, what happens is that if you look at the number of startups that are emerging, or people wanting to be founders, or people who have taken the step to becoming founders, there isn't as much capital as there are the number of founders that are there. So there is a mismatch.
But why do you think that is? I mean, 10 years ago, these players were big in the market, right? SoftBank, Sequoia.
So look, it's like what happens in the capital markets, right? Capital flows are a function of macros. They are not a function of, in this case, the Indian market in that context would be a micro sort of a piece, right? So the macro here is what's happening in the US market, what is happening both at the treasury level and at the US administration level. So the tariffs, the uncertainty at many aspects, and before the current president took oath of office, I think there was enough indication that he would get elected. So I think there was already a sense that could be a churn in the US. And anything that happens, if US catches a cold, then we all sneeze basically. So there is a downstream impact. And then the other factor, which has been a big factor, is the advent of generative AI. So all the investors in the US want to focus their spend in the US. There is now this bull rush about generative AI in the US because that's really where your LLMs are happening. All the foundational action is happening in the US. When you look at the open market risk capital that's available, if I take China out of the equation, so that capital is now wanting to concentrate everything in that market. So it's a function of these two macros, and sometimes, of course, what is happening internally in these organizations. So there was some churn within these organizations as well. So there are many factors, which is why risk capital, to my mind, is critical infrastructure for any country today.
So it's interesting. You're saying that consumer tech is not getting as much capital as it used to maybe about 10 years ago. A lot of big players have moved out. And now the focus has shifted to areas like generative AI overall.
And deep tech, and I get crucified if I call it as an adjacent to generative AI. But the two things sort of are hand in glove, right? The entire semiconductor, like I remember 15 years ago, like if somebody talked about semiconductors in India, the person would get laughed out of every room, right? Because it would be like, please, let's talk about software, or let's talk about SaaS, But now this whole race of chips and, the entire sort of understanding that your moats, your really defensible moats are going to come when there is a hard science problem that is solved by research and unique sort of solution, which is basically broadly what deep tech means. And I think, and those are very capital consumptive. So even AI is very capital consumptive, and so is deep tech. So that's the other reason why the big players, which came specifically actually from the US or from the larger Western markets or Far East Asian sort of markets, are wanting to concentrate because they want to, whatever capital they have, risk capital that they have available, they want to sort of back that. And while capital markets should not impact private markets, but of course they do. So when you look at the Nvidia price and everybody is like salivating and saying, can't we get startup, new Nvidia, and that we all know like the kind of capital Nvidia would require, new Nvidia tree would require. So it's that concentration. I mean, it's a little bit of a perfect storm that has happened,
It's interesting you say that. So let's unpack this one by one, right? You're saying that consumer is not getting as much capital, but I would assume that even if there is a slowdown in the US, India on its own has many positive factors that it's dealing with, right? Whether it's a demographic dividend, whether it's an emerging growth economy compared to at least a slowdown that we're seeing in the US and UK. So I would assume that a lot of the capital would come into India now, but you're saying that that's not the case.
No, I'm saying two things. I'm saying that for any sort of ecosystem to really blossom, not just grow in a linear fashion, you always need domestic capital. So if you follow the history of venture capital, which sort of took birth in the US, and you look at the early LBs that backed VC, they were domestic players within the US, whether it was from the balance sheet or these were independently wealthy sort of individuals who funnel some of their sort of capital into VC. So that's how Apple, or I mean, that's how actually General Electric was born, right? I mean, if the individual JP Morgan had not funded Thomas Edison at that time, and that's really the birth of General Electric, right? So, and then since then, there are so many examples, whether it's how Apple was funded or Microsoft was funded, and so on and so forth, or even Nvidia. So you do need that domestic capital, because the domestic market opportunity understanding will always be with a domestic investor. So let's really start from there, right? Now, your own imperative of wealth creation, with the national imperative and national policies, again, they work very well and interface with each other. So, the amount I or any other domestic sort of investor will know about how our government is thinking, both at the center or in the state. You cannot imagine a foreigner coming in and being at the same level.
Correct.
And not to say that they can't, but it's a function of nuance, time. It takes time to sort of, get to that point. And look, if I create wealth for myself, I'm a taxpayer in this jurisdiction. My farmers are taxpayers in this jurisdiction. My LPs are taxpayers here. So, I mean, already you could see how wide that wealth creation net has a downstream impact, right? Whereas a offshore investor or a foreign investor will obviously be aligned to their national interests. So there is that aspect, right? So if a founder comes to me and says that India needs, let's say, a coffee brand, I mean, will I be more empathetic? Let's just start at empathy and then, of course, go down to the harder stuff on numbers, the opportunity, market size, all of that. As early stage investing is a mixture of intuition, because we're working on imperfect knowledge and understanding. And at that point, when
you have no idea how anything is there.
And because there's so many variables, the founders are a variable, the market dynamic is a variable. You don't know what
demand supply is.
Exactly. I mean, supply chain is a variable, because if there's some aspect of your supply chain that is impacted by, let's say there's a war somewhere, suddenly your cost of your raw material of a particular important part of your product goes up, and you have no control over all of those things, right? So point I'm making is, but having said all that, you can still see what the opportunity is, because you're immersed in that sense in the consumer change, shift. But again, investors sitting overseas may or may not fully sort of
understand the potential.
Yeah, because maybe it is peaked in their markets, or it may look like an old idea in their market, and it probably is. But in our market, where there's a whole new age consumer emerging, I mean, it's a great opportunity, and it's an opportunity to actually build a very, very large company.
So, my objective with this show and to, pick your brains is to understand from your vantage point what the next 5 to 10 years could look like for someone who's looking to start up, right? Anything, any area. Now, you spoke about coffee. That, of course, has now become a very cluttered space, but 5 years back, there's a huge opportunity there. Over the next 5 to 10 years, where do you see the white space, the gaps that can be filled both in consumer and consumer tech?
So I'm going to answer this in two parts. One is, I firmly believe that no market, bar none, is ever cluttered. It's like there are no small parts, only small actors. So there are no such thing as a cluttered market, only a bad founder. And that's the honest truth, because every business can be optimized. It could be at the supply chain part, because there are always, there's some downside to every business, right? It could be seasonality, it could be dead stock. I mean, there are many aspects to a business that can be really refreshed. So therefore, it at the front end, it may look, it's just an apparel brand. But look, Shein addressed so many issues, right? One of them was the front end, the back end sort of integration. But till then, VC had never touched an apparel, company, because it was not seen as viable. You couldn't see the growth. So therefore, there is no such thing as a cluttered market. There's always a way to optimize it better, and therefore build a very large company and get really, and optimization is actually what builds a business. The product is almost incidental, I would say sometimes, because It's like food delivery, for example. I mean, what it's about to do, basically, they got the technology and connected all the small moving parts, which by itself were not viable. On their own, each part was unviable, right? As a operation, it couldn't become a large business.
But what they also did is created a market that did not exist.
But that's how you create a market. That's my point. You see, markets will give way and reward you handsomely when you take out the inefficiencies. So markets don't exist because of inefficiencies. Why? I mean, like if you look at overseas, I mean, look at how large, I mean, the market cap, the balance sheet of, let's say, one of the QSRs like McDonald's is. So why did they become big? And the reason is not because they made the best burgers, or burgers were a scarce commodity or a product in the US. I mean, literally you can buy a burger in every corner shop in the US. But they took out all the inefficiencies of that business and made it so efficient, and that's why the market loves them, and that's why the business became so big. That's why they could become a global brand or a global company, because if you don't take out the inefficiency, then everything breaks down every time you open a market, and it could be a micro market, it could be a different geography, but your business will start breaking down, and that's why you can't grow. So it's when you create, you take out the inefficiencies, whatever the existing inefficiencies. So which is why there's no such thing as a cluttered market. So let me start from there. Having said that, what has really changed in India, and I would almost say globally, is the advent of Gen Z. I mean, it's a completely different generation when it comes from how they want to look at the world, both from a consumption standpoint and technology standpoint as well. And which is where, therefore, the opportunity lies. The second thing that has really happened significantly is social media. So what social media has done, so in India specifically, what has happened is now we have very clear age cohorts, right? But we don't have the inefficiencies of regional breakdown. So what I believe today is that a Gen Z sitting in Patna, Patliputra, Patwarganj and Prithviraj Road are all consuming the same media. So therefore the aspiration is the same. Now let's say the aspiration is to buy this jacket, right? And the percentage of what they're willing to spend of their disposable income is pretty much the same. But what is now the difference is that they don't have the same disposable income. So therefore the same product can now exist at different price points. But all of them are willing to go online to shop, go to Q-commerce to shop. In the case of tier 2, tier 3, I mean, the offline penetration is just very, very poor. So which is where a lot of the e-commerce thing becomes, a way to sort of get into these markets. So that's one. And again, what social media has done, so while we got these individualized age-based cohorts, which has taken away the lumpiness of the fact that earlier you thought that somebody sitting in Madhya Pradesh would be different from somebody sitting in the NCR region. So that has gone away. And the other homogenization that has happened is across age groups. So today, silver dollar, India, we don't call that generation baby boomers, but for the sake of understanding, the baby boomer generation is also being led by what the Gen Zs are doing, right? So this jacket could be worn by a 70-year-old also, and a 20-year-old or a 25-year-old also.
So you're saying you are
just to complete
age agnostic, geography
can be on certain categories and products. But the question is, the founders have to find those products. So there will be some products where the Gen Z will completely reject everything that the parents are using.
Correct.
And say that my identity or my life or how I see the world is very different. So I'm going to reject. So there will be those categories as well. But what I'm then saying is that the Gen Z will be pretty similar regionally also. So that gap between, the metropolitan cities and tier 2, tier 3, from an aspiration perspective has flattened.
And that's a very good thing.
It's a great thing because it increases your time automatically, right? And the second thing I'm saying is that in some categories, there's an age homogenization, which means that a silver dollar person and a millennial or a Gen Z would
will consume the same
product because they're all influenced again by the same social media sort of inputs.
So if someone wants to start a brand today, right, a company in any category, what is your advice to them? Being a VC, Where do you see maximum potential?
The only potential I see, or the downside I see, is when a founder thinks small. And what I mean by that is, too many of us think, and like some of the more earlier founders have said this, and people have not understood that nuance. So I'm not again being disrespectful to that advice. This advice that, oh, if it's your personal problem, therefore start that company. I think that's bullshit advice, because I may be literally be in a lovely minority of one, and then there's no market for your bloody product. So don't do that, is my advice.
Most of us are in that 0.1%.
Exactly.
Okay, yeah.
Exactly. So I mean, I find that advice, and I think the nuance there is that you may start with your personal problem, but observe everybody around you. I think observation is completely lacking. I mean, we are so keen to speak, try and show how much we know, what we know, as opposed to observing, okay, what are the shoes everybody's wearing here. So like, I mean, I do a lot of people watching at airports, both domestic, international, and across different parts. So what I've now noticed, in all airports across the world, everybody's wearing sneakers. You rarely see high heels in airports. So it already tells you that comfort is now the most enduring trend. So it's literally as simple as that. Observe people around you. Now, somebody, let's say a founder could be Carrie Bradshaw and wants to wear high heels in Manhattan all the time. So that's a personal sort of passion, but I don't think those shoes are going to work today, right? So it's about observing. It's trying to see and trying to, again, in a sort of, in a fuzzy logic sort of the way, you've got to try and feel your way into something that doesn't exist today. But try and see what really motivates people, not just yourself. Because if you're, like I said, in a minority of one, you're going to fail spectacularly, and then you only have yourself to blame.
But if we take an example, right, you were talking about how spaces are not cluttered, and you don't believe that, every space actually has its own way, or every brand has its own way of shining through despite a lot of clutter in that space. One company that you guys have invested into way back was Sleepy Owl, right? And great space, growing, but over the years we saw Sleepy Owl also go through a cash crunch. They almost shut down, then they opened up a
No,
bit.
they didn't shut down. They went through no, look, mistakes will happen.
Correct.
And I think, again, when we borrow these phrases from Silicon Valley and we say fail fast, again, I don't think people have fully comprehended what it means. What it means is, and I want to also point this out, that when you look at very large multinationals with great sort of, treasuries, and you think that, and they are sometimes also a moment away from shutting down. Because that's the way of business. Business is like being a cat. You need 9 lives. And if you don't, then you die.
Very agile.
Exactly. And businesses ultimately are run by people. People will make mistakes. You will take some wrong turn. Some mistakes are more expensive than other mistakes. And with a startup particularly, mistakes are bound to happen. But the question is, again, what is the intent of the founder? How do they recover from it? Do they acknowledge and accept that they made a mistake? And are they willing to put in the hard work? Because the hard work actually comes in at that point. How do you steer? I mean, like if I use the analogy of steering a ship out of troubled waters, I mean, that's the toughest job for a captain, right? Otherwise, they could just fall asleep at the wheel, and, the ship will find its way because of how engineering is. So it is difficult, and that's when a founder shows their true mettle. To my mind, if a startup particularly hasn't come almost within kissing distance of getting annihilated, I think then they're not doing their job. Honestly speaking, because it is not easy, and if it is too easy, then like the saying goes, if it's too good to be true, then it is too good to be true. So
then it's not true.
Absolutely, because it cannot be that easy. And again, I think a lot of founders start shying away from talking about their tough times. But I think it's important because, the next generation of founders are thinking that, oh, big rounds happen easily, you get your valuations easily, but none of it is true. I've yet to find a company that gets a high valuation easily.
I'm glad you brought that point out because, I wanted to understand from your lens what should a startup do in the 0 to 1 phase, right? Should you begin with being bootstrapped and then look to raise funds maybe, after 5-10 years, or should you start with funding immediately? What is the best route?
So again, the word bootstrapped is, I think, misused because look, all businesses need capital, and like sometimes founders will come and say, "Oh, we bootstrapped," and then I'm like, "What do you mean? You didn't take any external capital?" They say, "Oh, we got a CC limit. Oh, we took a loan." I'm like, "Hello, you took capital.
Yeah.
It's just that you didn't dilute equity, but you had some source of capital which you needed to infuse into your business, right?" So I think my view on that is that again, it's not a cookie cutter answer or a cookie cutter sort of solution. It's a question of what is it that you want to build? Can you find also capital in the market? Like I said, capital is scarce. It is not so easy to find. So I think the question for every founder should be, because if ever you want to raise capital, the first question any investor will ask is the speed of growth, because time is actually your most precious commodity as a startup. It's not so much capital, it's time, because the more time you lose to sort of get that growth, competition will come or the market changes, then that's it, then you dug yourself into a hole that you cannot climb out of. So let's say somebody was trying to build let's say a SaaS company, let's say 2 years ago. I would say that company will not be able to find money today because every ounce of capital is going into Gen AI.
Can you give me an example of any companies that you have noticed that started off, the idea was exceptional, but just because of losing out on time, it just never could?
I think there are too many of those that it won't be fair to talk about them, but founders have to understand that time is their most precious commodity, and you've got to be very, very quick off the mark, otherwise somebody else will overtake you. Well, like I said, the market can change. I mean, many things can happen. So irrespective of whether you want to raise capital, therefore, speed has to be your best friend. And in that speed, of course, you'll make mistakes, you will break a few things. But again, you should not be so married to any of your strategies that you can't walk away from it. And that's a very important skill a founder has to have. At every stage, you have to be able to walk away from an idea that may have been your dearest idea. And sometimes you have to stick to that idea also. So it's a judgment call as to when you walk away and when you stick to it. So that's the second most important attribute. And I mean, like I say that in a sense, it's not so important what's your pedigree or where you come from, or did you spend any time in that sector. But it's very important to have judgment, because the founders are always working in a fog, right? You can never see clearly. But that judgment can again, it can take you into the valley of death, or it can take you into a hockey stick sort of growth. So every step you've got to try and make that judgment and have to make it reasonably fast, so that you can keep that momentum going. So if a founder has these three qualities, I think these questions of when to sort of raise capital becomes easier to understand. Because let's say I want to start a PPC company, for example, or let's say I want to start a Gen AI. I mean, you got to understand what are your costs and can you underwrite those costs? Because if you don't underwrite, so like if you need a GPU, I mean, it's expensive. Yeah. What do? I mean, love is not going to get you that GPU. You need money for it. So what do? So you also got to see where are you sitting? What do you want to build? Now there are some businesses like consumer business or consumer tech businesses which don't consume so much capital. So there your decision making can be different, So it's a lot about where do you sit and what kind of gross margins do your products afford you. So like my thing is that if you've got an 80% gross margin like the way SaaS or BPC has, you don't need to raise a lot of capital. But if you're doing, let's say, groceries, or you're doing FMCG, food particularly within FMCG, those are lower gross margins. Yeah. So you do need, because there's brand building, there's team, there's opening up channels, all of that costs money. Inventory, everything costs money, right? So that, of course, you should be thinking, if you are not able to generate enough sort of, balance your working capital, you are not able to balance your payouts, and what you need to sort of run your business with. So those are the judgment calls.
So you made a very interesting point that a lot of money now is chasing these new sectors like Gen AI, deep tech, etc. Right, and not just in India but globally as well. I want to understand a little more about that. As someone who kind of channelizes all the money into these businesses, what is the kind of opportunity that you're seeing in generative AI, in deep tech, and from an Indian POV? I mean, globally, of course, we're seeing a lot of money being spent there, but from an Indian POV, what's the opportunity?
So again, I think the question we want to ask is what are our problems that can be solved? Right?
Correct.
So I'll get to the Gen AI part first. In Gen AI, I think Gen AI is going to, at one level, is going to be hygiene, irrespective of whatever business you're building. So which means that if, let's say, it's a consumer product company, do you just need to buy tools or Gen AI tools to sort of, again, optimize various parts of your business processes? If you're a Gen AI company, not a, so the question is, what should you be building in that? And again, where's your market? So, like what we saw a lot earlier in the earlier version of entrepreneurship in India was consumer tech could build large businesses in India. So didn't need to go overseas. But if you look at all the SaaS businesses, they all wanted to go and exploit the American market because you could convert your consumer, your enterprise clients much faster. You got very good sort of money for it. Subscription happened, renewals happened, all of that, and so you could build large companies. In fact, SaaS companies didn't want to be in India because there wasn't enough. Our enterprise wasn't deep enough from a customer perspective, and they won't convert fast. Now, the question I think a Gen AI company has to ask is, where is their customer? Who are they building for? And therefore, what is the problem statement? What I see from the founders that I meet within Gen AI is that clarity is not enough because there's a lot of hype and froth around, should it be LLM? Should it be a Rabo? Now, it's agentic AI. Now, I think for a founder at this point wanting to build in, let's say, Gen AI, you've got to cut out all the noise and almost go internally within to try and see what is the problem you want to solve to a large extent, and do you have therefore the skills, the wherewithal and the capital to be able to solve it at scale so that you can build a large company is what I feel is happening. Having said that, because there's so much emphasis now that the government is also putting in, there's both a lot more capital than what was available even a year ago because the government is now putting in so much of an effort into it. So I think within the next 6 months to 1 year, I think we will now see far more clarity because I think there's been a lot of noise around it, and ChatGPT has had the maximum mindshare for most people. And that itself has, been very seductive, like, oh my God, what a product. But how do you make money out of it? Like, what's the use case,
Okay, so I think a big takeaway for me so far is that a lot of funding is now going to new sectors like Gen AI, Gentic AI, etc. Right? But in India, do you see a lot of startups springing up in this particular space?
I mean, I don't know what a lot means, but from a definitive number, I think in another 6 months to a year, I think we will see, like I said, when the fraud sort of begins to settle down, and there are newer ideas that emerge. Right now I think we're all dazzled by ChatGPT. But what next? Like, what else can, AI do either from an enterprise perspective? Like, see, now basically founders need to start thinking, what is the business case for it? Whether it's consumer or enterprise, what can you do with, I think the larger understanding is that AI can do everything, and including replace us, as a species. Which is great and good. I mean, we'll cross that bridge as and when it happens. But I think there's that larger understanding. But now to narrow that down to specifics, the way, technology did in the earlier sort of version. So when consumer tech first emerged, it was again to create better processes and make many businesses more viable and, of course, more agile. You could understand data better. So this is, of course, many sort of generations ahead of that. So as that use cases and, ideas emerge, which can be turned into businesses, I think in another 6 months to a year, I do expect within India, we are going to see a lot of activity there. I mean, there is already activity, but the kind of plethora of companies we saw in consumer tech, I think that we are about 6 months to a year away
in agentic and
Yeah,
AI.
yeah.
I think now if you just say the word AI, then you
Yeah, you get a term sheet. You get a term sheet. So, I mean, we are hearing AI and all sorts of strange things. It's like, we used to hear machine learning and everything earlier. So again, these are cyclical things and like I said,
Buzzwords.
yeah, these are buzzwords. And water will find its level, is my view in general.
Absolutely, absolutely. So from a founder's perspective, right? If a startup founder wants to approach a VC, what is it that he or she should prepare himself for to get VC funding?
So 2-3 things that I look for is what is the unique insight that the founder brings. So I'll give you an example. AI is a good example. Just to say agentic AI, GPU, I mean, look, great. But what is the unique insight have you got to the table? Therefore, it tells me that whatever you are wanting to build, there's something there. So I'll give you another example. Like you meet a founder today. If a founder comes and tells me, oh, we are very deficient in Toti, like to me, that founder is a no-go because you're going to tell me something more than that, right? How will you address it? Now, if you one more sort of energy bar and one more sort of makhana, honestly doesn't cut it for us. So it has to be something that you have arrived at, and you should be able to explain how did you arrive at it. And so like what I said earlier, oh, I had a personal pick. Again, it doesn't work, at least for me. I need to know, is it enough of a problem? And that again doesn't mean, a lot of founders will tell me, oh, this is a dam, and if I add 1%, again, that's not what a VC is looking for. It's a unique insight. Something that tells me that you understood it better than, let's say, 30 other founders who could be building in the same space, right? So that's one. Second is, for me, again, it's very important, is do you understand how to make it into a business? An idea and a product is not enough. You should be able to understand the business part of it, because ultimately you are going to run a business. It's not a passion project. It's not an NGO. So you have to be able to think about your COGS, your gross margin, your supply chain, some understanding of how much capital could you possibly need in the next 3 years. Because again, it shows an understanding of the business. So let's say, again, if you're building in the protein, what are you thinking about your supply chain? I mean, how much are you going to get impacted by raw material prices? If let's say you're procuring it from overseas, which some founders try to buy from the US, for example. Now, the minute the prices or the dollar, the rupee weakens to the dollar, ultimately your raw material is going to be that much more expensive, but can you increase your prices to your consumers? Have you built enough consumer love for it? So you've got to understand the business part of it, which therefore it'll help you understand how much capital you need to raise, which would help you understand your valuation better. How much should your current round be? It's not a number that we pull out of thin air. Just because X founder raised $1 million doesn't mean that you should be raising 8 crores. It's even if you're in exactly the same so-called product, the end product could be the same, but you can be far more capital efficient. I mean, you don't have to be as silly as the other person because that person is going to blow up a lot of money. So I think these are very important. This is what you need to be able to communicate, at least to us, and I think to any good VC. How will you build a team? Because again, a lot of founders will say, oh, I don't need to give more than 5% ESA. I'm like, which world did you, like
Both 5% ESOPs.
You don't need more than 5% ESA. I'm like, which world did you sort of grow up in? Because you want loyalty from your team, yeah. And on salary, you can't get that. So if you don't have a ESOP pool, so again, there's understanding of investors, capital, business, gross margins, COGS. And if you don't understand any of that, then I think it's going to be a little bit problematic because, like I said, ultimately it's a business.
So are there any red flags when you meet as an early stage VC, when you meet founders, what are the red flags that you look for?
Red flags is if you're too glib. And like I said, if you come up with these very trite answers, oh, this was my personal problem, oh, this VC is giving me a 100x valuation. I'm like, be my guest, knock yourself out, take that 100x, like I'm not in that business of competing. So I think you should also know how to negotiate, because negotiation is a fine art, and a founder has to negotiate for everything, with vendors, with employees, with future investors, current investors. So if you don't understand and you don't have that, you don't negotiate with respect, and you try to be cocky or try and be arrogant thinking that that's what will get you that term sheet, it is, for me, it's a big red flag, because I think the investor founder relationship should always be cordial and should work on both sides on trust and the assumption that we are both trying to do the right thing. So I think if you work from a low trust sort of base, then it's a no-go, or thinking that I know founders are more superior. Again, it's a no-go, because it's a long journey, and your best friend is a founder. No matter how big you become, is actually humility, because you may have achieved a lot, but there's already somebody else who's achieved even more. But even then, you've got to understand that luck and so many other factors have also contributed to your success.
So, 10 years ago, 15 years ago, Archana, there was the startup ecosystem was not just new but up and coming. There was a lot of scope, right? Right now, because so much has happened in the startup ecosystem in the last decade, do you think it's harder to be a founder at this point compared to how it was 10 years ago?
I think it's easier now, because there's better understanding. So your neighbors, your friends, your family, they don't think you're completely cuckoo if you want to be a founder. So that helps, because you do need support from your immediate surrounding. If your family or your peers are going to look down on you, it becomes actually a lot harder, because as it is, it's a very lonely journey. I think there are many more investors, and therefore this risk capital is a better understood sort of piece. So, like earlier, again, the thing that we imported from the US was this friends and family round. And my point was, how many people in India have those friends and family that can give you even 5 or 10 lakhs?
Correct.
Right? How many of us have that? So the fact is that for most founders in India, you do need early stage risk capital, and that is available today. Far more than what it was 10 years ago. And I think those things have helped. There are many more people you could speak to. There are many more communities now where you can sort of find your tribe, so it's a little less lonely.
We do also see this whole loop of, raising money and then a lot of cash burn to kind of penetrate the market, grow the market, and then raising another round and further cash burn, and then, startups to invest.
Business that didn't cash burn. Maggie is a good example. Just because Nestle did it, so nobody threw any stones at them. So show me a business that doesn't consume capital.
Then why do startup founders have to bear a larger brunt of the wrath?
I think because the narrative has been built that way, and this is the point I'm making, when you talked about Sleepy Owl. My point is, show me a business that's not always on a precipice of disaster, because that is the nature of business. And the bigger you become, the bigger your disasters are, So similarly, show me a business that has not been capital consumptive. Maggie lost money over 20 years. Who did anybody throw stones at Nestle and said, oh my God, cash burn, just because it was of that? But it was the investors' money. They also had investors' money, right?
A lot of MNCs do get away scot-free. I agree.
So that's my point. So, this narrative that cash burn is this terrible thing, that's the whole point of risk capital, right? Even when you take a loan, a bank loan, you look at an SME, look at their balance sheets. Yeah. Are they not burning money? When you start anything new, can you make money on it from day one? Show me that business. It'll be a service business, but you can't scale that business. So I think this narrative to paint founders as these villains, I think in India we're envious of people who we think have got money easily. They don't understand how tough it is actually to raise a round, and then to fulfill those conditions of that round, right? And then to raise the subsequent rounds. But because the narrative looks as if, oh my God, like I said, this valuation, how did he get that valuation? How could he get, so much money? Because I think the earlier generations think that they had it hard. So why do these people have easy? But it's not easy.
It's not, it's not. But why do you think India has not reached that point yet where we've been able to build a large product oriented company, in the maybe in the technology space, like an Apple or a Meta or an Nvidia for that example? Why has India not been able to? India has always been very service led in terms of an economy, but in terms of
There's a deeper geopolitical answer which I will not give you because for many reasons. But look, I mean, think about the size. If your size of your economy is X, what can you build? 3x, 4x? I mean, you can't defy gravity. So let's also be realistic as to where these founders are building it. They're building in a $3.5 trillion economy. And those guys are building in a $45 trillion economy. And if that's the economy that control, I mean, listen, their currency is where everybody's currency is pegged to. So will they not have an extra advantage? I mean, Warren Buffett actually spoke quite plainly about this. He is that successful because he was born in the US. Had he been born in Somalia, he would not have been Warren Buffett that we all look up to. So I think let's also be fair to our founders. If this is your, the pool that you're playing in, can you outrun that? And the answer to me is no. The day the world works, where everybody's currency is pegged to the rupee, we'd have our Nvidias and Google. And I think, again, let's be fair to our founders. If this is the size, and like I said, we are a risk capital scarce country. Look at the amount of capital that's available to American founders. And I'm talking about risk capital. I mean, you don't even need more than a 10-minute pitch to get a lot of money thrown at you. All the research is happening there. So you're expecting founders with literally both their hands tied behind their back to be able to build that Google. And I think that's a very unfair expectation.
So from a startup ecosystem point of view, what more do you think needs to be done to aid the startup community? What more needs to be done for more of these larger companies to be built?
See, like I said, first of all, you can't outrun some macros. Let's be very, very clear on that. So if the rupee is pegged to the dollar, it is what it is, right? Second is, but the things that we can do, I think, is definitely unlocking more risk capital. Because all businesses with bar none anywhere in the world run on capital. You cannot expect people to you need money to make money. Let's be clear. So if an Indian founder has 10 rupees, I mean, how much can that founder multiply that 10 rupees, right? You can't, again, like I said, defy gravity. You can't defy, economic. So if we made more risk capital available to our founders, I do think we can build larger companies here.
You mean domestic risk capital? Because foreign risk capital is
will be
beyond our
capricious.
control.
And it'll be capricious. No, it is not entirely beyond our control because they are also looking for opportunities. It's not to say that, and India is a very, very attractive market. But the thing is, like we've seen in our capital markets, it is capricious. I mean, they will, flee the minute there are other conditions that we can't control as a country or as a market. So one must be aware of that, which is why I'm saying that if there was an Indian SoftBank and there was an Indian Tiger, there would have not been the same impact on the Indian ecosystem. So we need to create our own SoftBanks, we need to create our own Tiger Global, and that's not so difficult. I mean, again, because the size of the pond that we are playing in also impacts. That's the reason we don't have a SoftBank here, right? So if there's more domestic capital that gets unlocked, you will see bigger companies getting built. And that velocity has already started, right? I mean, look how long Naukri took and how long Zomato took. And the next generation after Zomato will take even less time to build that market cap. And that's, I think, a huge, huge achievement for India. I don't think it should be looked at lightly at all. In fact, my request would be that people should not throw stones at Dip and let him buy his jet. I mean, you've got to think big, and his time is money now,
Correct.
So I think this mealy-mouthed approach to business, wealth creation has got to stop, basically.
No, I 100%, I completely agree with what you're saying. It's your journey has been very interesting as well. So tell us a little bit about that. How did you get here, and how has your journey been so far?
Uh, I'm an accidental VC, and I think maybe that's a little bit of a flex that helps you better, because I believe that again, to build anything anywhere in the world, I think you need a multiplicity of experiences that allow you to be able to see things a little bit more differently. Because one other problem we have in India is that, like, we work on momentum investing. We've got so much FOMO. So if a coffee company is doing well, then everybody wants to be a coffee farm. And I'm like, there's so many things you can do, right? And if somebody is doing one deal, then all other VCs want to do only that deal and no other deal. And I think that's really got to stop, because you've got to be able to build your own conviction, whether as a founder or as an investor. And I think the fact that I've had different sort of ways to look at the world, and I think that is what has helped me build my own conviction.
So when you say accidental VC, that's
So
because
I was actually trying to set up an accelerator, and this is before Y Combinator had become active in India. And like, if you talk to any founder, and they would say, oh, if only there was a Y Combinator in India, we'd all be apples and we'd all be whatever. And I said, yeah, this is a problem to solve. And then, again, this is how you get your market wrong. And, I started trying to work with some founders, and the founders would do one meeting where they were okay to talk about Gyan and, like, how to build company. But the second meeting, it would be like, are you writing us a check? So, and you're like, and rightly so, like, don't waste your time, because if money is the most pressing problem, then no matter how much GAN you get, it's not going to solve anything, right? So I realized that founders are very transactional, and rightly so. And at that time, between SEBI, RBI, NCA, they were trying to sort of organize this whole private sort of market into a more structured way. And it was getting difficult to hold equity as in a private limited company. And that's how I ended up applying for a license, and that's how I became a VC, because of the regulators.
Wow.
Yeah, so there's something good when the regulators do something.
What were you doing before that?
So like I said, I used to also be an angel investor, and that's how this whole, so like I used to have some access to founders, and they would be like, if only there was a Y Combinator in India.
What is Y Combinator, just for the answer?
So Y Combinator, again, so this is a very important question, because a lot of people in India think that Y Combinator is an accelerator which has this intensive 3-1 program, and people think that you can magically find that product market fit, and then you get that escape velocity. And of course, Airbnb is one of the most successful set of companies. What I didn't know, and what a lot of people don't know, is they're actually a fund, because what they do is they take 7% of your equity for a fixed amount of money as part of a 3-month acceleration program.
Okay.
And that's how they make money. So the other issue is that accelerators actually don't have a business model, which also I discovered that there is no way that I could make money. So, you can't, again, you could do this as a not for profit, but if you're interested in business, that every aspect of business has to make money, right? Otherwise, charity doesn't work. It's like a MBA school, they don't give scholarship, because if you're going to make money as an MBA, then you got to pay for it. So the point about this lack of understanding of what are the things that have worked in the US it's a very important learning, because you really got to understand how US thinks about the private sector. I think there's a lot of misunderstanding about how the private sector really works in the US. I think the proximity of the government and private sector is not well understood outside of the US, and how they work it. That's how these very, very large global corporations get created. The US administration is not at all shy of commerce and business, and I think
Absolutely capitalistic.
exactly, in every sense of the word. And I think the more we understand that, the more we build large companies, large global companies.
That's very insightful for me, because I also believe that charity is on one side and capitalism is on the other side. So yeah, absolutely. Just some final thoughts on what you see as the way forward in the startup ecosystem in India, right? Because we are at a juncture where there's a bit of a slowdown going on globally, and as you said, it's not a funding winter, but funding is harder to come by now in certain spaces like consumer tech, perhaps because of other areas which are growing. But if you had to just summarize all of that, where do you see the startup ecosystem head from here?
I think we've got our tailwinds in the startup ecosystem. I don't think we're going to slow down. Funding winter or not, or funding autumn, let's say, for the moment. I think it has caught the imagination of the people, and that's really what gives us our tailwinds. So I don't think that we are going to see a correction, or I don't see that there's going to be a lack of interest in entrepreneurship, or to start a startup. I think the only piece I feel, if you could correct, it would go a long way, is the narrative. This narrative of easy money and burn, I think that does mislead founders, and I think it gets a backlash unnecessarily. And I think if we could contain that backlash, I think we could even be bigger.
And what's the holy grail? Like, what is, if a founder wants to start up today, what are the 2, 3, 4 things that he must keep in mind, he or she?
First of all, be a polymath, which means think deeper, be nuanced, don't chase trends. To me, that's the holy grail. Because if you think independently, at some point the world will wake up and notice you. And you've got to be patient. Don't chase headlines. I mean, you don't need to be on the front page of, you don't need to be for 30 under 30. I mean, don't chase those vanity metrics, is what I would say very, very strongly. And I think those have been big distractions for founders. So being a founder is a lonely journey. It is built in darkness. Great businesses are built in great darkness. They're not built under the spotlight. Leave that to film stars and others who are in the spotlight, and wait for your turn. When you build something magical, the world will notice. I think those are the holy grails.
Well, it was really a pleasure speaking with you. Thank you so much for being here. And it's a very interesting topic because a lot of people want to build businesses, they struggle.
And as they should.
Yeah.
And as they should.
And they should. Yeah. And this is a great time. I mean, of course, in the last 10 years, the startup ecosystem has come into its own, has grown in a big way. And now the world is recognizing, right, in terms of sectors as well. So thank you so much for being here with us on The Money Mindset.
Thank you so much for having me.